A very good evening, dear students. I'm your mentor from the Board of Studies, CA Shraddha. So, today we are still going with the chapter 8 of our study material, which is Payment and Declaration of Dividend. In the last class, you have studied about Section 123 of the Companies Act 2013, which basically deals with payment, like what is dividend, and how dividend is declared and from what all sources it is paid. So generally what happens is, good evening Soumya, good evening Miss P, good evening students, good evening dear students, good evening Nidhi, Priyanshi, Meenu, Jayendra, good evening. So many a times we get a call from the students saying that ma'am, the study material is too much and then the syllabus is like that we cannot revise it in such a less time. So what happens is, if you would have seen the study material, section 123 is for approximately 4 to 5 pages. Okay, today I will just help you in 5 minutes that how to make a flow chart of section 123. You can improvise it later as per your need, so that during the examination you can recall the provisions of this section. So let it get imbibed in your mind that provisions related to dividend. Just a moment. Ajit. Okay. So the provisions related to this dividend are primarily contained in section 123. You get very many times perplexed that how will we remember this section. So I will be saying not dividend. Most of that sometime I will be saying in section 123. Okay. So what is like dividend? Dividend categorically means is given under section 123. Sorry, 235. Then it is dealing with payment of some money. Some money. I'm saying this words in sense that some money. अगर किसी कंपनी को shareholders को कुछ पैसा देना है, the company wants to give some money to the shareholders, then they have to give it in some form of money. And if they have to give it in some form of money, then how can they give it? So now from here we will be revising. So if the company wants to declare dividend, then from where it can declare? From the sources that the company is having. So dividend, a company may declare, the word is declare dividends from think about what all earnings it will be having. So from profits, will be saying profits. What profit I have, I can give money to my shareholders only from that account. So from profits, then profits can be for this year that I have earned or for some previous year. So profits can be from current year profits, or I'm using the word accumulated profits. I hope my screen is visible to you guys. Okay. So मेरे पास जो पैसा अपना अभी का है, जो मैंने अभी अर्न करा, which I have earned right now, or which I have in my account. So take it on yourself. So I am a company either from the current year profits or from the past year profits. Okay, that is clear. Or I can do this also. Some I am using from my current year profits plus from accumulated profits. That is either this or the second one or both. Then in some cases, if I'm not having any kind of money, I means company is not having any kind of money, then they can be provided from, one more thing is money provided by government. Let's not use the word central, from government. So it is in the form of a guarantee generally. So मेरे को इतना पता चल गया कि मेरे पास प्रॉफिट्स, मेरे पास पैसा मुझे देना है, एंड उसके मैंने सोर्सेस सोच लिए. Supposedly, if I have to give, take it personally on yourself that if you have to give money, first of all you will see that कि क्या मेरे पास पुराना कुछ ऐसा नुकसान रखा हुआ था जो मुझे किसी को देना हो. I have some losses that I have to first adjust. Yes, accumulated and past same होगा. Just trying to move this sheet. Okay. Yeah. Yes, we will recover liability first. So for that, what the Companies Act is saying, that you have to provide for two things. One is depreciation as per Schedule 2, and then the other part is that you have to take first pay off the brought forward losses. Okay, so this is this. Then the next thing is, if I have to declare, if I have to give some money to my shareholders, then the company will think, will they give everything to the shareholders, or they will like to create or keep some money for themselves. So what we can call that as reserves. So now, is it mandatory for the company to keep something in reserve before declaring dividend? The answer is no. As of now, the answer is no. Okay. Next. Then next thing is loss we have talked about. If I am declaring dividend out of accumulated or past year profits, should there be more checks and balances in that case? Yes. So in that case, in case of accumulate, if I am using accumulated profits and the company is in not having profits or is in loss, then I have to follow the provisions of Rule 3. Okay. Then, is it necessary for the company to declare dividend only at the time of AGM? क्या मैं पहले declare नहीं कर सकते हम? We can. So that point is known as interim dividend. Okay. And for interim dividend, the point is that if a company has, the major point for interim dividend is that if a company has incurred loss, why we are again and again emphasizing on points of loss, why Rule 3, and in case of interim dividend also, why we are emphasizing? Because if the company is having losses and then they are providing money, I'm not using the word dividend here, I'm using a word money. You don't have to use the word money in examination. This is just for you to recall. So if the company wants to give money to the shareholders in the form of dividend, then what will happen in case of loss? The Companies Act does not want that the company should give all the money to the shareholders. They should keep something for themselves. That's why they are putting more checks and balances. So in case of interim dividend, if the company has incurred a loss up to the end of the quarter, to the end of quarter preceding the declaration. Okay. So in that case, interim dividend cannot exceed what? Cannot exceed the average dividend declared in the preceding 3 years. It is almost similar to rule 3. If you see, somewhat the lines are similar. Then I have thought about that if I have to declare dividend, then what, from where I can declare? What are the sources? Then in case of loss, what needs to be done? Do I need to maintain some reserves? And then we have talked about the point of this losses preference. Okay. So next is an interim dividend also. Now, if I am declaring dividend, I have declared the dividend today. Can I pay it to the shareholders at my whims and fancies? Okay, I have declared it. I am giving them. Okay, ठीक है, I will pay it to you, but I pay it after 4 years. That is not possible. So the Companies Act has provided the timeline for declaring dividends. So I am using the word timeline, which is your 30 days. Now, if I am making my notes, I'm writing 30 days, but I would request you to add the words from the date of declaration. Okay, this is also fine. So timeline for payment of dividend. Now, what happens is we are saying, is it necessary that all the dividend to all the shareholders must have been paid within these 30 days? No. So we have something with the name of unpaid dividend, which you must have either today you will be discussing or you must have done it. For that, we are saying that any unpaid dividend must be transferred to the unpaid dividend account within 7 days after the said period of 30 days. Okay. Now, I am saying that money needs to be provided. Money needs to be provided, but they will not be providing cash. So we need to see that what is the mode of payment. So we have mode of payment. Cash provide कर सकते हैं? नहीं. We can provide check. मैम ये टॉपिक मॉड्यूल्स में कहाँ है बेटा? दिस इज सेक्शन 123. Then warrant, and then electronic mode. Okay, and it will be paid where? To shareholders registered bank account. Okay. Why this is to be written? बहुत बार बच्चे वर्ड नहीं लिखते, लिखते हैं टू द रजिस्टर्ड बैंक अकाउंट. किसके रजिस्टर्ड बैंक अकाउंट में? टू द शेयर होल्डर्स. ऑब्वियसली वी आर पेइंग मनी टू द शेयर होल्डर्स. I will just see that what all queries are there. Just a minute. Yes, accumulated liability and 30 days. These are topics from the study module only. If you want, I can show it to you very much in the module. So with this, what I'm trying to tell you that if you have to, like for me, it took 15 minutes, but if you have to remember it now, dividend पैसा पे करना है तो उसके मेरे पास सोर्सेस क्या क्या हैं, करंट ईयर प्रॉफिट, पास्ट ईयर प्रॉफिट्स, बोथ, या फिर कहां से, अगर मुझे गवर्नमेंट ने गारंटी दे रखी है। अब मेरे को अगर पे करना है तो पहले मुझे अपने ब्रॉट फॉरवर्ड लॉसेस को एडजस्ट करना पड़ेगा, डेप्रिसिएशन प्रोवाइड करना पड़ेगा, आई हैव टू प्रोवाइड फॉर डेप्रिसिएशन एज पर शेड्यूल 2। नाउ सपोजिटली, अगर ये मैं आपको फ्लो बता रही हूँ जिसमें आपको एग्जाम में रिवाइज और लर्न करने में आसानी होती है। देन व्हाट हैपेंस इज, इफ आई हैव टू पे इट फ्रॉम losses, I have to pay it from accumulated profits in case of loss, then I have to follow the provisions of rule 3. Then we have talked about that in case of loss, can we still declare interim dividend? Then for that specific thing we are saying up to the end of quarter, the average rate of dividend in the preceding 3 years. Then what is the timeline? And then again timeline and mode of payment. So this was regarding your section 123. So one student is even saying about 5 days. Yes, 5 days is also a timeline here. So 5 days is also a timeline. 7 days आपका from the end of 30 days होता है. Okay. So this was it. आप किसी भी सेक्शन के यू कैन मेक सच फ्लो डायग्राम्स अकॉर्डिंग टू योर नीड फॉर एनी सेक्शन विच विल हेल्प यू व्हाइल यू आर रिवाइजिंग द चैप्टर. गुड इवनिंग सर. Shrikant sir.
Yeah, good evening, madam.
So this was all from my side, sir.
Yeah, so great. Thanks a lot.
Thank you, sir.
Yes,
Please continue with this chapter, sir. Thank you.
yeah. Good evening and welcome to this nice revision by Shraddhaji, which I'm sure all of you enjoyed. So today we will begin where we left off. Before that, yeah, good evening to all. Just let's not further waste time on good evenings. I thank all of you for your nice greetings. And see, there is one question raised by Miss P. I mean, that's what we get in the in that message thing that is coming as Miss P. I'm sure she has a full name, which we don't know. See, she is asking a very important question. Essentially, her confusion is, her problem or her question is, there are two overlaps here, she says. I think that what she says is correct. See, for the financial year 24-25, we said the interim dividend can be declared anytime from 1/4/24 to the date of holding AGM. Please note that point, madam. It is not necessarily 30th September. 30th September is the last date before which the AGM should be held. So what we are really looking at here is when is the AGM. So keep this thing in mind. It's just this, yaad rakhna hai. See, it is from 1/4 till AGM date, one period. From AGM date onwards. So suppose I am declaring some dividend in June or July, my AGM is not held. Then it pertains to one financial year 25. Suppose AGM was held in July 31st. AGM over. Now on August 15th or August 17th, you want to declare another interim dividend. This pertains to financial year 25-26. Interim dividend for 25-26. So you are declaring your dividend when? In August. So 2 quarters over. So the quarter which you have to consider would be April, May, 1 quarter over. You are in the second quarter. So April, May, June. So June quarter, you have to see what is your position. And based on that, you have to go ahead and you can use past profits also. So, but once your AGM is over, that's it. That financial year over. That, see, whatever interim dividend plus final dividend would be. Conventionally, to my knowledge, I mean, this is not a rule. I'm saying practically, I've never seen companies declaring interim dividend for an earlier financial year in the period April to AGM. Rarely. Maybe in April, May, June, they will do it. First quarter, they will do it. Beyond that, they would rather see anyway the board meeting is going to happen. Yeah. You can as well declare it as a final dividend and pay it to him. Why make it interim? Because your accounts are ready, audit is going to get over, you're going to have an AGM. So I think the straight answer to your question, Ms. P, is AGM. Before AGM date, earlier year. After AGM date, current year. This is the best answer I can give you. But practically, nobody does this. I've not seen. See, they will declare the first interim dividend around August, July, August, September quarter. Thereafter, again, one more. So even regular companies now, where I said now we do a lot of work for them. Generally, I don't see them doing it for April, May, June. So June, the audit will be almost over. July, around August, they will hold their AGM. So whatever interim dividend they declared during that year, now 1/4 date, plus the final dividend recommended by the board, together will be presented to the shareholders at the AGM. They will approve it. Thereafter, the balance, the final dividend portion, that will be paid within 30 days, as Madam rightly said or correctly said, 30 days. Somebody was asking a question about 5 days. I didn't see that query. It is not coming on in my chat box. I don't know where that is coming. So 5 days is, and I don't also see any questions in my query pad. There is one, now P's question is coming into query pad also. Okay, same thing. I hope, Ms. P, you have understood something about what I said. This is the best answer I can give you. I agree. Seems to be an overlap, but need not be, because till AGM, earlier year. AGM over, then no more approval for the last year. Last year, story over. So current year thing will start. So it depends on when you hold your AGM. So the last date for holding that is 30th September. So that's how it is. It's not such a complicated thing as you think it is. Once you get into real life, it won't be so complicated. Don't worry. You have the power to decide what you're going to do. They give you the power to declare interim dividend right up to AGM date. It doesn't mean that you have to go right up to that AGM date. You have to declare an interim dividend in July. Normally nobody will. Beyond March till AGM, rarely. Because during that period, I'm still finalizing my accounts. Everything is in a flux. I just don't have the type of quality time to think of giving dividend to these guys. What I'm more concerned is what is the final dividend I have to declare, which should be approved by the board and recommended by the board. So, and then goes to there. So there I'm more concerned about that, to arrive at the correct profit for the year, whether my interim dividend itself was correctly declared, etc., etc. So once the AGM is held, you come to the current year, which is 1/4/25 to 26 now. Maybe in September, July, August, September, we try to give one interim dividend for the current year after the AGM is held. Are you clear? I hope I have given my best answer to you. That 5 days, somebody was asking, no, what is that 5 days? For interim dividend, I still humbly suggest that I will not use the word declare for interim. It's only announced by the board. Okay, but if you want to use declare, do it, yeah. No problem. But if you say declare dividend, whatever you do, once the board announces the dividend, within 5 days, the money has to be transferred to a separate bank account. That is the 5 days. Don't confuse with 7 days. That comes later. 30 days, then 7 days. Don't confuse. You are the board of directors. You have announced the dividend. That's it. The clock starts. 5 days. You can't keep that money. Send it to the separate bank account. Uske baad, you have to pay the dividend within 30 days from the date of announcement, which we call declaration. As Madam said now, whenever you said 30 days, never just say 30 days. No. 30 days from the date of declaration. So, date of announcement by the board is called declaration, assuming from that day, within 30 days, you have to pay the interim dividend, which was deposited within 5 days into the bank account. So, you deposited it within 5 days. It is safe. Now, nobody can touch it. But the board also has the duty to pay within 30 days. So, the 30 days is common, which is why, how did they define dividend? How did they define dividend? Dividend includes interim dividend. That means what? All the provisions applicable to dividend is applicable to interim also. Okay, this is how you have to take it. Yes, Priyansh, see, I am announcing it today. Your question is 5 days included. Yeah. See, I'm announcing it today. That is the date of declaration. One section says within 5 days I have to deposit it. Then another section says dividend includes interim dividend. Therefore, what is the rule for dividend? 30 days from the date of declaration. Or the idea of that 5 days is to protect the money. See, they don't want board of directors to loosely make statements and then run away. If you're going to say you are going to give a dividend, ensure that the money is locked and not rotated in your business. It should be kept aside. This is how I'm able to understand this scenario. And this is how, see, as I told you, our firm is conducting audits, dividend audits for certain companies, large listed companies. For certain purposes, they want an independent review. So they hire us. So this is how they do it. I can't name the companies because of confidentiality. Believe me, they are pretty large listed companies. So they use our firm for this very particular service. And so this is how it is. So I'm also taking from practical experience. P again has a doubt. Interim dividend, average dividend means interim and final. What if both rates are different? No. See, hello, please. You are now going to declare a dividend, interim dividend. Last quarter, you made a loss. Now you're supposed to declare a dividend. So the law says go back for 3 financial years. There you have to take both interim and final, as you rightly say. You have to see there is no interim. Once board, AGM is held, now it is single. So for example, during the year, I declare interim dividend 1 rupee per share. Assuming 2 times I do it. 1 rupee plus 1 rupee, 2 rupees per share paid. Later on, final dividend 3 rupees per share. Now for that year, what is the dividend? 5 rupees per share. 5 rupees per share. Okay, that is how you have to do it. And so that you have to take the average. And if the average, you should not go above the average. That means you have to only maintain. That is the point. It cannot be more than the average, is the point. And revocation means withdrawing, denying, revoke. Revoke means to call back. I make a promise, then I say, sorry, I can't do it. So revocation. Wonderful. These questions are all very interesting, but I have there's a long way to go before we can sleep. So let me, go to my slide and start where I left off. Today we'll be continuing with the discussion. I'm very happy that, we had a learned faculty from BOS giving a very nice summary of what we did in the last class. So I don't really have to do that again. Nevertheless, for the sake of better understanding of the topic, I thought we could do one more problem, or shall we say one more question in this declaration of dividend out of accumulated reserves. Okay, declaration of dividend when there is inadequacy or absence of profits. Now, friends, again, one humble point I want to make here. Accumulated profits is a word. But when you say accumulated profit, be careful where it is. Accumulated profit in P&L account is surplus. You can declare dividend whenever you want out of it. The accumulated profit in P&L account, a P&L account may have, that is available. You can declare any time. No need to get any permission, no condition. But suppose you have transferred it to general reserve or some other dividend equivalent, which is free and available for dividend. Those reserves, if you want to use for declaring, then only you have to comply with these conditions. Got it? So accumulated profit itself, two different. So maybe in that notes, you make that point also. Accumulated profit, again, branch it. One P&L account balance, freely available, which is nothing but current year profit plus accumulated last year's profit, everything in P&L account is surplus. Whereas transferred to reserve, that is available for declaring dividend. That is what you can declare out of reserves. So difference between reserves and surplus. See, in the schedule 3, we refer to this particular line item as reserves and surplus. Reserves and surplus. Reserves, plural. Okay, reserves, plural. Surplus, singular. Kyun? Because reserves, there can be more. General reserve, dividend equalization reserve, capital redemption reserve. So many reserves, there are reserves are there. But surplus sirf ek hi hai. सरप्लस सिर्फ एक ही है. क्या है सरप्लस? P&L अकाउंट में बैलेंस है ना, ये सरप्लस है, सिर्फ एक ही है. सो दैट एक ही सरप्लस है ना, दैट्स व्हाई वी डोंट से रिजर्व्स एंड सरप्लसेस, ये सरप्लस. सो P&L अकाउंट में एक सिर्फ एक बैलेंस है ना, एक एंड ऑफ द ईयर आफ्टर ऑल दिस dance drama, you give transfer to dividend, declare, transfer to reserve, declare a dividend, all sorts of things. Finally, what is left? Carry forward. Next year, opening balance. That is called surplus. Okay, you may know this. Still, I thought I will make this clarity. Because P&L account balance is always available to you. It is a free reserve for declaring it. Okay. Now, here is we have already seen this, if you remember. In the last class, we did it. Now, here is a interesting problem in case you want to. My suggestion, I'll give you about 3 to 4 minutes to work out on your own. I'll give you about 3 to 4 minutes to work out on your own. Then I will look into the chat and see if you are giving me the right answer. This is a multiple choice question. I don't know if you have MCQs in the exam. If you have, then good. Otherwise, also no problem. You have to apply the condition and write it in the exam. That's all. Long form में लिखना चाहिए. That's all. Nothing else. लिखना पड़ेगा. What would you say? Somebody is asking about Nidhis continuously. I don't know if it's in your syllabus. See, Nidhis are basically finance companies, but very peculiar finance company. They will borrow or take deposit only from member, and they will lend only to members. So the idea of a Nidhi is very closed group of people lending and borrowing from each other, form a company called a Nidhi company, and they will see. It usually Nidhis are restricted to geographical area, maybe a town or a city, or in a large city like say where I live, Chennai, we have each location has a Nidhi. Okay, so the idea is that local people now, they will be able to see, suppose local, let's say, for example, we were auditors for a fund from those days, a Nidhi called Madras Mutual Benefit Permanent Fund. See the name? Madras Mutual Benefit Permanent Fund, pre-independence. It was formed in a place in Chennai called Triplicane. And they were doing very well. They built their own huge building in Triplicane and etc. etc. So the local people of Triplicane, people like me who have very little savings, so they will give it to as a deposit. This money will be rolled, and again some businessmen in Triplicane, they want to borrow, they will come to the fund and they will lend. So because the business is restricted to members, these Nidhis have certain exemptions on the rate of interest they can charge, capital adequacy, all that they are given some liberty. It's called Nidhi company. Just for information I am telling. Okay. Since Nidhi is also one type of company, there are many sections of the companies that Nidhis will be exempted and all. And especially meetings and when you come to management and administration, you will find the way the Nidhi can give a notice, etc. Because they are a local population. Everybody is almost known to everybody. That is why Nidhis are given this exemption. Problem was in India in 1995. I'm so sorry to say I was alive at that time, very much actively engaged in practice. These Nidhi fellows did all sorts of fraud in South India. So thereafter, the government has been very suspicious about 96, 97 was a major crisis in India for the NBFCs. Maybe it's almost history now. Nobody remembers it, but the damage still continues. The NBFC suffered, Nidhi companies. That there was another beautiful local financial methodology in Kerala, Tamil Nadu, and parts of Karnataka, maybe even Andhra Pradesh, called chit fund. That is also there, but all that got totally destroyed by these frauds, and the government came down heavily on them, and RBI sort of. For your information, since you asked me what's a Nidhi, I'm telling. Exemptions are there. Nidhi companies get a license from the government of India, because of which they're exempted from many of the provisions of the Companies Act, and also some RBI regulations are not applicable to them. They won't be treated like any other NBFC. Special regulations are there for Nidhis. Okay. In fact, outside of Tamil Nadu, and maybe parts of, as I said, Kerala, Karnataka, parts of it. Nobody will understand what is Nidhi. It's a very peculiarly South Indian, I should say Dravidian, not Dravidian, South Indian trend. Rarely you'll find it in north, going north. You rarely find it. Okay. So I've given you enough time. Let's see if you've solved it and given me an answer. Nidhi Vishwakarma says 10%. Anubhav Malik says 15%. Okay. Many of you are hitting 15%. We have another 12%. Okay. Now, what I will do is with tongue in cheek, I'll get into the answer. Tongue in cheek, I'll get into the answer. Let us see. 10%. Don't worry. How do I get it? That is more important. Don't immediately rush to, destroy me. Oh, sir. Oh, you can say. When I have given 15, how you can say 10? Correct. I'm not saying 10. I'm going to give the logic of 10, then you agree on it. So, my dear friends, 15% some of you have told now. So, maybe that is based on this. Average rate is 15%. No doubt about it. The average rate is 15% given. But that cannot be enough because that is only the first condition. Well, there is a first condition, right? Now you have condition 2, quantum. You remember, condition 1 says the rate of dividend shall not exceed the average rate of dividend declared during the immediately preceding 3 financial years. That is condition 1. Now, condition 2 says the amount to be drawn, quantum condition, the amount to be drawn shall not exceed 10% of PC plus FR, paid up capital and free reserves. Am I correct? So, now what is PC? 10% preference shares, 10 lakhs. Paid up capital includes preference capital also. If you, in case you are, see my suggestion, if you have a notebook or something, write this down and sort of put it in a box. Maybe if you have a highlighting pen, highlight it so that you'll never forget in the exam hall. When you get the paper, remember, PC plus, not only here, in many other cases, in buyback, so many places you'll find paid up capital, If wherever you find paid up capital, remember, paid up capital includes preference also. Paid up equity capital, if they say only then nowhere in the Companies Act, I'm humbly submitting, nowhere you will find they use the word paid up equity capital. It is only paid up capital, which means preference shares also included. So 10 lakhs plus equity 30, I get total 40. General reserve, free reserve. Securities premium, no. Credit balance in P&L account, yes. Net profit for the year, yes. So 2 plus 1.8, 2. So free reserve is general reserve 8 plus credit balance in P&L plus net profit totally 2 plus 8, 10. So PC is 40 plus FR 10, total 15. On that, I have to charge 10%. But be careful. The preference fellows are there, they have to be paid in preference to the equity. So 10% of 10 lakhs, 1 lakh. 10% of 10 lakhs, 1 lakh. They are 10% preference shares. So 10% of 10 lakh, 1 lakh. So balance 4 lakhs. Now, what can I do with that? Maybe I can declare 4 lakhs quantum. Okay, 4 lakhs by 30 lakhs into 100, maybe 13.33. That is not in the answer itself. So let us see what happens if I draw 4 lakhs. See, friends, free reserve as of now is 10. Free reserve is 8 plus 2, 10. Now, how much I'm going to draw? Brother, first I will draw 1 lakh for preference now. What I will draw 4 lakhs for thing now. What will happen? 10 lakhs minus 5 lakhs will become 5 lakhs. So the balance of reserves will fall to 5 lakhs. Whereas, you remember the balance of reserve condition? Do you remember? What is the balance of reserve condition? See, the balance of reserves after said drawal should not fall below 15% of paid up capital. The balance of reserves after the drawal should not fall below. So post equity dividend, your reserves should be maintained at 15% of paid up capital. So what is 15% of paid up capital? 6 lakhs, right? After you declare your preference dividend, what will be your free reserve? 9 lakhs. From that 9 lakhs, can you reduce 4? If you do, what will happen? Your balance of reserve will become 5, which will be less than 6 lakhs, less than 15% of paid up capital. So not possible. Nahi chalega. It is not going to happen. 4 lakhs is nobody's number. So what is it then I can do? You have to cut your coat according to the cloth. Yeah, you got 10 lakhs. Out of that, the preference follows, you give them 1 lakh compulsory. You are left with 9 lakhs. Balance of reserves should be 15% of paid up capital. Balance of reserves should be 15% of paid up capital, which is 66 lakhs. So 10 minus 9, 1, 9. Now I need 6 here. I need 6. So how much can I pay? Only 3. Are you able to understand my logic? So if you want to have a balance of 6 out of 9, then only 3 lakhs is available. So if you withdraw 4 lakhs, the balance of reserves condition is not fulfilled. Therefore, you have to restrict your dividend to 3 lakhs. How I got it? Your balance of reserves should be 6 lakhs. What is 6 lakhs? 15% of paid up capital. Total paid up capital, not equity, full paid up capital. 6 lakhs. You pay preference dividend, what is left is only 9. You need to retain 6. So only 3 rupees available for these guys. Take it. So amount you can pay 3 lakhs. And that is restrict, and that percentage will amount to 10%. Okay. So this is a thing. This is how 10% is arrived at. I hope you are able to, sort of get it. Huh? Yeah. Kushi Mehra, Sunil Kumar, many of you have given to. The surprise Mohammed Farhan with 12%. I don't know where he gets 12. 15 is okay. 15, Anubhav and Meenu and all, you are directly taking the average rate. No. Further, you have to do it. See, why I worked out this problem, so that, little bit, you have to be prepared for out of the way. Little bit. So I'm not saying it's going to be extremely tough, but definitely not. You should distinguish a CA intermediate examination from a UG or a PG exam. No? That is right. So, okay, friends, moving on. If you have still got any doubt, we will take it up. No problem. Just keep putting your doubts on the chat box, which I will keep seeing. Actually, there is something called a query pad. You can also put it there, or you put it in the chat box also, but I can't see the chat box always. So what I will do is I'll be covering substantial number of slides, and maybe around 7 o'clock, I will again look at your queries. So we have covered some important aspects of declaration. Now they have very clearly said these type of companies cannot declare dividend. Cannot declare dividend. Okay. One important category is a company which fails to comply with the provisions of 73 and 74 relating to acceptance and repayment of deposits. Okay. I'm sure you have studied that topic already. I don't know. Otherwise, you will study it. Don't worry. When there are certain rules for acceptance and repayment of deposits. One of the important provision is repay. So here they are not only talking about repayment of deposits. In some other sections, possibly like different shares carrying differential voting rights, they will say non-repayment of deposits alone will disqualify. Whereas here they are saying total compliance with the provisions of 73 and 74. Means once you say section 73, section 74, you are also including rules. So whole company's acceptance and deposit, rules. Complete compliance. If there is a non-compliance, sorry, you cannot pay dividend. Why? Because, see, these are depositors. They are poor fellows who have deposited their money with you. You are not paying them. You are not complying with their requirements. No, you want to pay to your shareholders? No. So you make good that compliance and then declare. Oh, I will ask you, who will find out all these things and either warn the company or prevent the company? Any idea? Who will be the person who has to do it? Who will have to do it? Ideally, company secretary, if there is one. If they have a full-time company secretary, whole time, that fellow. In case the company does not have a whole-time practicing company secretary, then this matter will come up only at the time of audit. In case they have a CFO, maybe that CFO can also advise. But finally, when it comes to you for audit, if you miss it, sorry, you're opening for professional misconduct. So you should be very clear, boss, you're declared, because they will come to you now. At the time of auditing, they would not have paid the dividend. It will come to you for declaration now. When you see proposed dividend, you will ask, how you are proposing dividend, boss? You are yet to comply with 73 and 74. No, that is okay. We want to pay dividend. Sorry, my dear Mr. Directors, you cannot declare dividend. Who has to say that? You and I, auditors, chartered accountants, that is our unhealthy, unfortunate job to be people who will tell negative things to the board. They go, no. So then if they declare, they will, and you sign the balance sheet, end of story for you. Because the directors will say, we don't know. Auditor only said, you can go ahead, I did it. He is supposed to see all these things. Only they will put the blame. The Ministry of Corporate Affairs will sit on your neck. And if the amount involved is high and the company is a large listed company, NFRA, okay, start the game. So be very, very careful, which is why, my dear friends, you cannot downplay the importance of company law as a chartered accountant. Do not ever underestimate company law. Later on, when you go to final also, it's not a compulsory subject, it's only a self-paced module. You still remember, those provisions are also applicable. So in auditing, you will have to do it. So somewhere you have to be very strong. Otherwise, if you're not thorough with company law provisions, in auditing, you will be in trouble. Okay, that is why we teach you company law. Okay, so remember that it's not some non-core subject. No, it is core. Because when you audit a company, remember, go back possibly when I come to audit report, if I teach you audit report, I will show you. Therein, the NCA has fully introduced one condition for the auditor, whether the company has complied with the provisions of the Companies Act 2013. You have to certify as an auditor. Therefore, your knowledge of company law should be a little higher level than that of a company secretary, in my humble view. I mean, in terms of what do you call that? That procedural filing forms, blah, blah, they will take care. But in terms of understanding the section and applying it, I think we should be there to tell clearly section applicable or not. If so, how? Very clearly. Okay, my humble view as usual. In case of Section 8 company, which I'm sure you're aware of what it is, it cannot pay dividends, as you know. A Section 8 company is prohibited from paying dividend because the profits are to be applied only in promoting the objects for which it is formed, right? So, this is a chart. I am trying to help you, as Madam rightly said, this type of charts can help you a lot in preparing the examination. Instead of reading pages, I have tried to convert it into a flow chart, if you can remember. This is for dividend. Friends, that 5 days, you be clear. 5 days applicable only for interim dividend. Once the board announces interim dividend, within 5 days, it has to be deposited in a separate bank account. That's all. So that's about it. Don't bring that 5 days after that. If you deposit in separate bank account, 30 days you have to pay it. So that is the main provision. So 124, section 124, which deals with unpaid dividend, is applicable to both interim dividend as well as final dividend. So once the dividend is declared, it has to be paid or claimed within 30 days from declaration. Friends, they say paid or claimed. Why? Because I might have done my best to pay. For example, I have a list of bank accounts which I got from the DP, depository participants, with PAN number, etc. I deducted tax, etc. And I have given instruction to my banker to transfer. Now, transfers happen. Subsequently, 100 accounts, those fellows have not maintained those accounts, or they have given those accounts for DP in the depository participant, but that account is now inactive account. So what happens when this goes there? The bank refuses to take the credit. So the credit bounces back. It can happen. It comes back to my account. Which account? To my normal account. Okay. Now, Is it unpaid? I don't think so. It is unclaimed. I made my effort. He is not having. Now, whose problem is that? His problem. So what the law says, wait for 30 days. On the expiry of 30 days from declaration, on the expiry of 30 days from declaration, the next day, within 7 days, this money has to be transferred to the unpaid, unclaimed dividend account in a scheduled bank. And it should be called unpaid dividend account. This is compulsory, whether you are listed company, unlisted company, public company, private company, whatever. Okay. See, I might have mentioned last time, there was a company which set up that effluent plant, could not do it and all. So these guys now want to take the money as dividend out. So I asked, how many of you? 19. Now all of you have bank account? Yes. No, sir. Out of 19, 4 people are not traceable. What are you being here? 19 people, you guys can't keep in touch with each other. No, sir. 14 people don't know where their account, what to do. I said, sorry, brother. We'll declare a dividend. 15 of you will get the money. Those 4 fellows, we will send a check or we will send an instruction or whatever. It will be bounced off. Whatever happens, you have to transfer it within 7 days to a separate account called unpaid dividend account. So what happened was we declared the dividend, paid it, then 7 days, within 7 days, in fact, why 7 days? I said, why 7 days is the limit? We know these fellows are not going to claim it. Anyway, we waited for 30th day. First day, after that, we opened the bank account, kept it ready, and transferred the 4 guys' dividend to the unpaid and unclaimed dividend account. If this compliance is not done, from expiry of 7 days, you have to pay interest at 12% per annum from the date of default. See, the default happens on midnight on the 7th day. Default happens at midnight on the 7th day. So the next day, it's still lying in your account. From that day onwards, you have to pay 12%. Plus, later on, you will see stiff penalty for non-compliance with 123, 124 and all that. Okay. Then, it is there now. Now what you need to do, you have to prepare a statement giving name, last known address, unpaid dividend amount. Put it either on the website of the company or the website approved by the government for this purpose. Idea is, so this guy wants to finally claim it, he can go to that and see whether that is there in it. Now, thereafter, it is going to lie in this unpaid, unclaimed dividend account for 7 long years. 7 long years. So at the end of 7th year, this amount has to be transferred from the unpaid unclaimed dividend account together with interest, if any. So see, after all 7 years, it will earn some interest now. That is not yours. You can't touch it. It belongs to the investors. It is not your money now. Your money means not the company ka paisa. It has to be transferred to IEPF. Okay, Investor Education Protection and Education Fund ka transfer karna padega. Why? Because that's a big story. I'll tell you as we go. It's a beautiful story. And I was, lucky, I was there around these times in investor activism. I was the reason, about 15 years ago, I was the secretary of the Tamil Nadu Investor Association. One of the second or third largest investor associations in India. Vadodara, Ahmedabad, 2 powerful investor associations, very powerful investor associations. Tamil Nadu was also one. Tamil Nadu Investor Association was a very powerful body, very vocal. And SEBI used to listen to us. SEBI used to call us for advice. Our president and ex officio, sometimes this idiot secretary also had to go, and they will ask for our views on certain new things. Of course, Ahmedabad would come, Vadodara would come, and I think 1 or 2 others, but these are memorable. Ahmedabad is one of the largest investor associations. So, this IEPF, how it came, I can tell you that background. So, is it IEPF or IPF? It's actually IEPF, Investor Education and Protection Fund. It's a mistake, I'll correct it, but Investor Education and Protection Fund. Now, sorry to say, my personal opinion as a share market investor since 1985, the Indian investor cannot be educated, cannot be protected. Cannot be educated, cannot be protected. We cannot educate him or protect him from his own greed. See, the Indian investor, I have the average Indian investor, but for a few value investors, about 2% of us are there. We are value investors. We buy value propositions. We make money in the market. The rest of them are traders. They go there, buy, sell, buy, sell, buy, sell. They talk as if they know everything. Nobody can educate us, but I have done my best for 3 long years. I was secretary. I have pleaded with my members. Don't do this, do that. Mr. Srikanth, you are a chartered accountant, but you are not able to understand market, sir. Correct, sir. I don't understand market, sir. Please go ahead, sir. Then when they finally lose all their money and come to their langot, now they will say, what are the chartered accountants doing? Why are they not protecting us? Boss, I can't come to your house and protect you. Yeah, I've been telling you, don't invest. Don't now, not a correct time. Don't invest in Yes Bank. It is a bogus bank. I've been telling you. But you don't, seriously, when Yes Bank came for shares, I never invested from day one because I know the background of those management. I know what that company is. Everybody knows. In spite of that, our friends, the great investors of India, they were driven by greed and they invested in that bank and then it started going up. So, as and when the Yes Bank price goes up now, my investor association members will say, Srikanth sir, see, Yes Bank has gone up. We told you to invest now. Why you have not invested? I will fold my arms as usual and say, you have invested now. Very great, sir. Enjoy, sir. But as it became too high, the price and too bogus, I told these guys, boss, sell and come out. No, not now, sir. It will go to 1,000. Huh? Okay, fine. See, sorry, these comments are coming out of extreme experience. Since Harshad Mehta scam, I have seen the greed and ignorance coupled. The Indian investor brings together two deadly things. One is ignorance. This is coupled with greed. And then he goes to the market. In spite of that, SEBI, NSC, investor associations, fools like Srikanth, we keep on trying to educate this investor. And for that, we need money. Where will we get money? See, Tamil Nadu Investor Association has to hold a investor awareness program. At least I need to hire a venue. I need to, mic, all that stuff, PowerPoint. We'll inviting two eminent speakers. We won't pay for their travel and all. We'll see to it that when he's coming from Mumbai, when he's here, we'll fix. And he'll also come. At least I have to give him some memento, something, some small token of our affection, maybe a shawl. Some expenses are there. This expense also, we don't have money to meet. So who will give us? That is why they formed the Investor Education and Protection Fund. We will see that in a short while. Before we do that, let me see if you have raised any doubts. So this flowchart also, if you want, you can take a photograph and keep it. 90 days, 30 days, 7 days, 90 days, 7 years. That's it. Okay. So let's see. Let's go to the question. See, this is a beautiful question asked in 2018, which combines your knowledge of Dividend and the General Clauses Act. Later on, you will study General Clauses Act. The General Clauses Act, 1897. It's as the name implies, it is providing for those things that are not provided in any other law. See, or common matters that need not be repeated again and again. So in the General Clauses Act, you will find many common provisions are there. Our institute is doing a wonderful thing of prescribing it in the syllabus and giving it to you in intermediate. I'm sure a learned faculty would be teaching, some learned faculty would be teaching this to you, but therein you will find in section 9 of the General Clauses Act. This is a general rule. This is not applicable only for dividend. Wherever in any law, in any legislation or regulation, okay, where the word from is used and the word to is used. See, from, for the beginning of the time, the first in a series of days is we use the word from, and the last in a series of dates, to. So here what we say, 30 days from the date of declaration. Then, very important, the date of declaration, that is the first of those days should be ignored. That is the end, the 30th day, that should not be taken. So the date of declaration of dividend shall be, for calculating 30 days, the date of declaration of dividend shall be excluded. The last date shall be included. So the first, you should exclude the first in a series of days and include the last. This is the rule of section 9. So when you're saying 30 days, you have to exclude the date of declaration. You have to include the 30th day. Similarly, if you are talking about 7 days, then the 30th day should be excluded. And the 7th day from that day, the next day will be included. So by seeing this example, we will try to understand. Acme Engineering Limited has declared a dividend of 10% at its AGM held on 27th September 2020. The date on or before which Acme Engineering is required to pay the dividend. So when sorry, Priyansh, this is not the forum, this is not the time. ये डिविडेंड ऑन शेड्यूल्ड बैंक के लिए होता है क्या सर? Scheduled bank, I'm not very familiar with Hindi. Like at that stage, I cannot understand. But general understanding, I think you are asking dividend on scheduled bank के लिए होता है क्या sir? Scheduled banks are those banks which are mentioned in the schedule to the Reserve Bank of India Act. So the Reserve Bank of India Act has a schedule of banks, which is constantly amended. All banks are there, public sector, private sector, all are there. They are all scheduled banks. So any scheduled bank you can deposit. Okay. IEPF is Investor Education and Protection Fund. Investor Education and Protection Fund. So Ms. P has given the correct answer. Beautiful. So fantastic. Now moving on to so as Madam already pointed out to you, dividend, the registered shareholder to his order, we already saw this. In the case of Nidhi companies, please note, in the case of Nidhi company, both the depositor and the borrower will have an account. Nidhi companies are allowed to operate SP accounts, savings accounts for their members. So instead of paying him, they can credit that into the account of the member. So instead of pushing it in an unpaid, unclaimed dividend account, within 30 days, they have to pay it to their respective bank accounts. In case that is not possible, then they can credit the same to their account maintained by them from the date of declaration of the dividend. The reason is Nidhi company's SB account balance may be interest. They will charge it, they will pay interest on that. Okay, so they can. See, problem is if I encourage you to ask questions in Hindi, talk and all, I'll be in deep shit because I'm not fluent in Hindi. So I would love to help those of my brethren and sisters who cannot speak English, who need to be, who need Hindi support. Sorry, not that. I will try to be as asan as possible. Simple English, asan English, try to understand English, my English. I will do my best to give you asan English, simple English, which you will not have any confusion. Okay, I will do my best, but मेरा हिंदी थोड़ा है. I can't. I'm from a state called Tamil Nadu, so where rarely we speak Hindi. So, but most of us in Tamil Nadu are fluent in English. So, I'll try to speak Asan English. For those of you who not very fluent in English, I'll try to go as slow as possible. Okay. So, coming to the point. Any person claiming to be entitled to any money transferred to the unpaid dividend account of the company may apply to the company for the payment of the money claim. So long as it is in the unpaid dividend account, okay, it can be claimed from the company itself. So the person simply has to claim. All that he may have to do is he may have to change his DP bank account. That's about it. Because I can't pay directly to you. I can only pay it to the designated bank account registered with the DP. So you go to the depository participant, you change the bank account, give me the details. I will verify with the CDSL or NSDL, and who will then have connection with the DP. It will come to you. So, that is why today stock market related frauds have been to a great extent minimized. I'm not going to say eliminated, minimized. Okay, minimized. The only fear now is not collusive fraud like Harshad Mehta or Ketan Parekh, but electronic fraud, or shall we say, information systems level fraud, highest level frauds, which is why I'm a certified information systems auditor. So we conduct highest audit of share transfer agents and the transfer registrars who do the transfer of shares. We conduct a audit of their IS security, information system security, to see whether they are protected by firewall, to see whether they can be hacked or maybe the data can be changed. So all that we verify and we certify it to SEBI. So why I'm saying that is the level at which we are now worried about fraud. At a collusive level, very difficult because too many electronics, shall we say, support documents are supporting is needed. So unlike, in Harshad Mehta period when it was all manual, it was possible for him to do all this nonsense with State Bank of India, play around with the market. He could take a particular share and keep pushing it up by, giving it a support level, funding it, and whenever the share price comes down, they will buy it. So a group of brokers will keep buying and selling, so that the great market gurus are there, these fellows, the traders, they will see the share going up. Immediately, those days, no WhatsApp, email, or some other method of communication. They'll say, hey, Dubakur Limited, buy. I'm having some information. It will go up by 500 rupees. Exactly, it will go up by 500 rupees. Immediately, more bakras will come, and so on. So that's how Harshad Mehta did his scam. So more and more bakras come. They start pushing it up. After some time, I don't have to support. These fellows will support. And that share price will go up to 2,000 from worthless company ka. Karnataka ball bearing, worthless company ka share. He pushed it up. And then, of course, when he got caught, they closed the tap. Then who will support it? Market collapsed. And these Dubakur companies, they collapsed. Okay. Sorry, information. Those of you who are idolizing Harshad Mehta as a great hero, remember he was a criminal. He was a fraud and a criminal. Ketan Parekh was a fraud and a criminal. Okay, both of them. I think Harshad Mehta went to jail. Okay. I don't know, but Ketan Parekh also must have gone to jail. Okay, Nirav Modi, all are frauds. Fraud number one, criminals. Let's not celebrate them as if they are great people. They are not. Because of Harshad Mehta, many families lost their, the father of the family committed suicide. Because Swallow foolishly invested all his money in Harshad Mehta shares. Overnight drops. The entire family got savings gone. What this fellow will do? Committed suicide. Like that. So Harshad Mehta has a lot to answer for. Let us not make him into some sort of a Robin Hood. He did nothing. He didn't take from the rich and give to the poor. He stole from the rich and he stole from the poor. He stole from everybody. That's all. I mean, this is, I know because I lived during Harshad Mehta's scam. I escaped. I escaped Harshad Mehta's scam. I sold all my shares. And I, not because I knew there is a scam, but because of certain other mathematics that we know that this is not correct. The mathematics says, no, this is not real. Market is puffed up. So better you get out. So there I get out. Like that, 3 times I got out. Okay, Ketan Parekh I never entered also. Global financial meltdown also, 2007 I got out. I get out completely, I pull out 1.5 crores, then the market collapses. So many people are asking, how did you know? I said, look here, I didn't know about global finance. I'm not going to claim that I knew that global finance, but I knew that the markets are overinflated. For that, we have mathematics. But that mathematics, they will ignore in a boom. Even the highly educated people now, like even chartered accountants and economists, they will ignore it. The maths will be staring at their face. They will counter it with some other equations. But that maths is real maths. And it will show me exactly when to get out. Oh, penalty. Oh, company. For what? Unpaid dividend, 124 if you don't comply. If you don't pay the dividend within 30 days, 7 days, whatever. Then 1 lakh rupees in case of a continuing failure with a further penalty of 500 rupees for each day after the first, up to the 10 lakh rupees. And every officer who's in default, which includes company secretary, CFO, everybody, 25,000 rupees and 100 rupees for each day up to 2 lakhs. See, earlier there was a imprisonment also for this. There was imprisonment also, but now that they decriminalized the Companies Act, so now no imprisonment, only punishment by way of fine, no imprisonment. Earlier imprisonment. Before March 21, there was imprisonment also. Okay, now no. We now come to the concept of an IEPF, which we will now see. The IEPF, as I told you, it is meant to educate and protect. Investor Education and Protection Fund. So the IEPF should be established by the central government. See, this happened in even earlier. 2016 fund is the new fund. Please understand, 2016 fund happened now. Even in 99, 2000 itself, the IEPF had come. There was an earlier fund. Please understand. It's not that this is some great discovery of the new, no. Even then it was there. See, 97, 98, NSE had come and investor awareness had increased. Dematerialization had happened. See, that was the golden era of Indian stock markets. What all you're now seeing, electronic trading, blah, blah, you are taking it for granted. Believe me, in 1992, 93, we were having physical trading. 90s and all physical trading. I used to buy the share physically. I used to take delivery. So there will be a locker where I'll keep all the share certificates and take them out, verify order. I will every 15 days I'll do a stock verification. What all are there? Then whenever I sell a share, I'll have to send delivery to my broker, physical delivery. So whenever he buys the share, I have to go and collect delivery. Oh, and if I want to transfer it in my name, I have to send it to the company physically. Oh, that don't. I lived in that pain, so I know what I'm talking about. Then DMAT came, 91. Unfortunately, I'm sorry, DMAT came around 93, 94. But that was also the peak of KP, Ketan Parekh. So after Harshad Mehta, I was, once bitten, twice shy. Therefore, I refused to get into the stock market in that era. From post Harshad Mehta till Ketan Parekh, that one era, 10 years, I never entered the stock market. My entire money, I put it in mutual funds or in other investments, land, etc. 10 years, I never entered the market. People have been making fun because KP shares, people made so much money. So much money they made. But how much ever money they made, 3 times they lost. When one fine morning, Ketan Parekh said, another fraud. He cheated the cooperative banks, Maharashtra, those local rural banks. So he cheated in a different way. His elder brother did one thing, younger brother did another thing, whatever it is. Now the point is, what I'm now talking about is all history. If you want to know, you can go and read. Unfortunately, nobody has the guts to write a single book which will bring all these frauds into one available book for everybody. I don't know why. See, if it had been the United States of America, there will be 15 books written on these scams with good research by journalists. But nobody is bothering to document these scams. And people are forgetting. Many of you may not even know. You remember Harshad Mehta because of the serial, wherein he is made into some sort of a hero. The real fraud criminal Harshad Mehta should be exposed in a book. The real fraud criminal Ketan Parekh should be exposed in a book. Ideally. And to my knowledge, no such well-known book written by a good author has come. I wish somebody would fill the gap. I'm sure that Satyam also. See, Satyam, with all due regards, our past president, Padma Shri T.N. Manoharan, and another great chartered accountant from South India, a journalist chartered accountant, V. Pattabhiram, together they have written a fantastic book called Tech Phoenix. Tech Phoenix. It's a fantastic book, beautiful book. But that book documents the revival of Satyam. Post Satyam scam, how Satyam got revived and then sold to Tech Mahindra. So in that book, if 1 or 2 chapters TNM spends on the scam, and he is very charitable even to Mr. Ramalinga Raju, to everybody. He doesn't want to hit where it hurts. And that's his nature. So he is saying this is what it is. That 2 chapters, a budding chartered accountant should read to understand, what is this. But somewhere he is not gone into the details. There should be a total expose of all these frauds. I'm telling you, I'm not joking. It's not there. Such books are not there in India. But suppose it had been US or Europe, they'll be flooding the market books by journalists, okay, who are writing. Anyway, point here is around that 92, 93 time and all, there were Keth and Berek scam and all happened. So there was a need for education. But so central government and MCA, at that time, no MCA. They were called Department of Company Affairs. And they were part of something called the Ministry of Law and Justice, right? So they said, where is the money for all those? You don't have money. At that time, some of the investor activists, including one late Mr. Kannan, they were vehement. They went to the central government and argued. They said, look here, all this unpaid, unclaimed dividend you are taking and putting it in the general fund now. All these companies are transferring it. That provision was there for a long time. That provision is not new. So companies were, and within 3 years, they were transferring it. Now 7 years. In those days, within 3 years, they were transferring it. So in those days, it was 30 days, 7 days, and then 3 years. So at the end of 3 years, you got the money. And you keep sitting on it and earning interest on it now. Kannan said, look here, don't give me that money. That belongs to the shareholders now. But the interest on that money, that money is earning interest now. That itself will go into hundreds of crores. He gave statistics. He said, so much money you are having. Even if you give me 6% on it, every year you are going to get so much interest. Why don't you give me that interest? We will use it for investor education and protection. This is how the IEPF started. And government agreed. And even as early as 99, the IEPF concept came. In the earlier law itself, IEPF was formed. Then, of course, the old law was scrapped, the new law came. So the new law, they formed a new fund. Okay. So what are the amounts which have to be credited into this fund? Amounts given by the central government, donations by the central government, amount lying in the unpaid dividend account. So you got it now. 7 years it is lying in the unpaid dividend account. Baad mein, it has to be transferred to the IEPF. So IEPF gets, after 7 years, they will get it now. That money, amounts lying in the unpaid dividend account. Also, amount in the general revenue account of the central government. What is this amount? This is before IEPF, there was a general revenue account wherein all this money was poured. That money also he said, give it to us. And amount in IEPF. What is that IEPF? The old IEPF. This is the new IEPF under the new law. Earlier, Purana wala hai na, that IEPF ka money hai na, account mein. That also you give. And income from investment. See, this money is invested. That income. And then application money unclaimed. Wow. Guy makes an application for shares not allotted. It has to be refunded. That you studied in prospect. What is that? Share capital. What is the allotment of shares? Prospectus and allotment of shares. You studied it. It has to be given to him within 15 days. You remember? So if that is not claimed, what can we do? He is giving bogus bank account or wrongly given whatever. That money, if it is lying for 7 years with the company, it has to be transferred to IEPF. Matured deposits remaining unclaimed, transfer. Matured debentures unclaimed, all 7 years. Up to 7 years, he gets a chance. Beyond that, interest accrued on, HIJ above. HIJ, interest accrued. No? It will be in that account no, for 7 years. That interest also has to be transferred. Amount received from sale proceeds of fractional shares arising on issue of bonus shares or merger. See, suppose bonus shares are allotted, they'll give some ratio, 16:1. So if I'm holding 15 shares, I'll get 1 share. Sometimes when the number of shares I'm holding is odd, finally it might come to half a share, 0.33 share. Less than 1 share cannot be issued for bonus or on a merger and all. So what they will do, that difference amount, and I'm supposed to get, say for example, 10.33 shares. So they'll give me 10 shares, and for that 0.33 share, they will see the market value, calculate the amount, 0.33 of that, and that has to be paid to me. Okay. But from that time, if suppose it is unclaimed, that amount also will have to be transferred to IEPF. Okay. Also, preference shares redemption, redeemed preference shares remaining unpaid or unclaimed for 7 years or more. So everything is pooled together and pushed into the IEPF fund. Okay. Now, there's another rule 3 which talks about some more money. Okay, rule 3. See, another beauty and greatness of your new law is overlap between substantive law and procedural law. Unnecessarily, the rules and the procedural law is given too much importance. And they don't know what should come in the substantive law, what should come in the procedural law. See, substantive law has to tell what. Procedural law should tell how. So basically, procedural law should only tell that maybe due dates can be given, maybe forms can be given, should be given, authority before which it has to be filed. All that can be given in the rule. But here, many things which are not mentioned in the substantive law, they will mention it in the rules. So your knowledge of company law is not complete unless you read the rule also. Okay, they made it so beautifully complicated for no reason. It only needed drafting discipline. Instead, they have created enough mess. So all amounts payable as per A to N of 125 to all this. Why mention it again? It is there in 125. Yeah. Why are you mentioning it again? All those shares in respect of which the dividend have not been claimed for 7 consecutive years or more. Are you able to see here? They are adding some more thing. Only unclaimed dividend is going. Now here they are saying those shares on which dividend has not been claimed or paid will be transferred to IEPF. I really don't understand why, but it creates the share itself will be transferred to IEPF. So IEPF will be having an account with stockholding corporation or CDSR or NSDL. Into that account, this fellow should be credited. So that share will be not money, share. So the IEPF has to control those shares. Later on, if the guy whose shares were so transferred wants them, he has to go to IEPF, make an application. First to release the share, then the share will be transferred to his DP account. Then he has to go. Actually, it's a common application. The dividend will be given back to him. What all dividend was not paid will be given. There's a form for that which he has to fill. All the resultant benefits arising out of the shares held by the authority under clause B. That is, for example, if there are some 100 shares on which dividend was not, those 100 shares have got bonus shares. Those 100 shares have got dividend. All the resultant benefits will be transferred. I can tell you one story of a gentleman. See, we do this as a service to many of our clients and their friends. Some of them, see, sometimes invariably this will be a CFO or an MD or a CEO. His elderly father will be having shares and it will have gone to IEPF. So we will be having some meetings in that when he knows that, Shrikant, you are saying you are aware of company law. I never said I'm aware. Tell me what you want. So then he will say, can you help me? Then we start the process. We go to the company. We find out everything. Usually nothing will be there. Some old share allotment letter will be there, 1 or 2 share certificates. Based on that, we'll do investigation, go to the company. Luckily, if it is Chennai, any company secretary will be my student only. So I'll talk to him, say, Baba, can you help me? Or they'll be known to me. Across outside of Chennai, through some contact, I will go get the details of this guy. And then they will say, sir, long ago transferred to IEPF, sir, like that. Then what we will do, we will make an application to the IEPF, wherein we'll clearly document. There's a form for that, form 1, where clearly we'll document everything and then we'll upload it in IEPF. But usually once all the documentation is clear, and we'll also ask them to open a new DP account and keep it ready, then almost within 3 to 4 months, the IEPF would clear it. And they will transfer these shares to the designated new DP account. Then we will go to the company again. They will send a letter. Then they will release the dividend, etc., to the designated bank account. 6 months it will take. But after that, they will get all their money, their shares. In fact, the value of some of these shares are such that, one share worth 1 lakh. That gentleman had only 40 shares, but they are worth something like 40 lakhs, plus accumulated dividend, etc., all told about. So generally, I don't charge for it, but after they get such a big amount, they themselves come to me, sir. Some fees you charge, something you charge, whatever you want to give, like that we say. Okay. So see, this is the quality that I have developed over the last 40 years, sir. If I go after money, it will run. If I keep quiet, it comes. The more I run after her, Lakshmi keeps running. I simply sit and do my job and smile. She comes and stays with me. Whenever I want, she comes. So no need to be greedy and ask for money. They will give you. Never. This philosophy is called Tat Sat philosophy. Tat Sat. Whatever is there is good. We are happy with it. It's called Tat Sat philosophy. Okay. So all grants, fees, and charges received by the authority under these rules, all sums received by the authority, etc. So this is complete. This is under the rules. All income earned by the authority, all amounts payable as mentioned in section 10B of the banking companies. See, when two banks are merged, if there's any such amount which is not claimed by shareholder, under the Banking Regulation Act, Banking Companies Acquisition Act, it will come to the IEPF. All other sums of money collected by the authority as envisaged in the Act. Believe me, the IEPF is sitting on a huge fund. And they are also giving it. See, National Stock Exchange, Bombay Stock Exchange, all the investor associations, ICAI, ICSI, ICMA, to ICAI, whatever you call them, the cost accountants, and the SEBI, all of them conduct investor education programs. All of them conduct. I have been a speaker at easily CA, ICA, ICSA, Tamil Nadu Investor Association, of course, I was secretary, Madras Stock Exchange, National Stock Exchange, I have spoken as a speaker. So they conduct. And for that, funding comes entirely from IEPF. It comes entirely from. See, there are some nodal, like SEBI. SEBI takes the money in bulk and then gives it to investor associations. So we do it and then we report to SEBI. ICA and ICSA do it on their own, I think, directly from the IEPF. Or maybe they also get from SEBI. We don't know. Whatever it is, the money is available and it is used for creating, especially awareness about risky propositions. Okay. So how to utilize this fund? Refund of unclaimed dividends. I told you, matured deposits, etc. So whenever they come to claim, we have to give that. But rarely, if they really do a study, hardly 5% of the total fund would be paid out every year. In the meantime, another 15% is coming in. Okay, so the inflow will be more than the outflow. Fund will keep growing. Promotion of investor education, awareness, and protection. See, I like the concept of investor education as an investor activist, but after 35 years in this market and seeing the greed of the Indian investor, I doubt if we can protect him or educate him. Okay. Even if you protect him, see, we tell him, boss, have this gloves and go for, we protect you. He will say, what gloves? I don't need gloves. I can go directly and touch the wire like that. You go and touch. How can I protect that guy? You tell me. How can I protect a man or a lady from her own greed or ignorance, from his own greed or ignorance? God only knows. Now, Devade Galichar, only God knows. Distribution of any discharged amount among eligible and identifiable applicants who have suffered losses due to wrong action by any person. For example, in Satyam scam, because of the sudden disclosure by Mr. Ramalinga Raju, the price of Satyam fell. On that day, many people lost money, suffered losses due to wrong action. So at that time, they were formed an association and they claimed compensation. That money will be paid only out of the IEPF. Disgorged amount. So what happens? We go and catch Ramalinga Raju. Then we ask him, where is all this money? What happened? Then we take it from him now. We charge penalty. All that money is collected now. That is disgorged. Literally, gorge means, in the English word, gorge. Okay, gorge is this part. This. When the famous, the Samudra Manthan. At that time, Shiva, what he did, he went and took the alahala and he swallowed it. And it was going here. When Parvati caught his gorge, she caught it here. And instead of disgorging, it stayed in his gorge. and he became Neelakanta. So he became Neelakanta. But what we are actually doing is before the animal swallows it, we catch its neck and squeeze it and push it out. So Ramalingalaji, literally we catch his neck, and before he can swallow and digest it, we make him disgorge, make him spit it out. And that money we take and we take. I don't think anybody made Harshad Mehta or Ketan Parekh disgorge anything. And I don't think they disgorged it. They went on appeal right up to Supreme Court, enjoyed life and went away. And finally, Harshad Mehta died. Okay. I don't know about Ketan Parekh. Okay. So, so refund of distribution of disgorged amount and reimbursement of legal expenses incurred in pursuing class action suits. For example, when a huge group of investors are affected, they have to file a suit against the people. Now, they don't have money. So that legal expense can also be reimbursed. All this is because of Satyam only. As you go through these three topics, dividend, accounts, and audit, you will see so much knee-jerk reaction to Satyam. According to the MCA, another Satyam is just around the corner. And auditors are going to be the criminals who are going to do. That's how they think. So the only way I can protect the investor, catch the auditor and bind him and make him responsible, and keep on threatening him and shouting at him and put him more and more penal provisions so that the auditors will be afraid and they will do their job, which we were always doing 100 years, 1949. Before that, from Robert Clive time, auditors are doing their job honestly and sincerely. Okay, nothing. One Satyam, everything changes. No. If one Satyam doesn't make a dishonest man out of an honest man. Okay? All of us are honest, we are only honest. One dishonest man cannot prove the entire profession. But still, that is how. And so these are all knee-jerk reactions to Satyam. Any other purpose incidental there too, in accordance with the. So, main is promotion of investor education and refund of the unclaimed due. This is the standard work that is constantly done by the IEPF. Okay. So, under the old act, some money was there. No, that also will be refunded only under the new fund. See, suppose fund was transferred under the old act, 205C of the old act. That was in 99-2000, the IEPF was formed under the old act. That refund, so those monies also will be refunded only under the new act. Okay. So there is an authority for administration of the fund. The MCA has constituted the authority-wide notification dated 13/1/2016. So this is the IEPF authority. See, let us understand one thing. The IEPF is a fund. The fund cannot do anything. It is only a fund. So that fund has to be managed now. That is the authority. Are you able to understand? I'll give a comparison. There is a mutual fund, right? They collect money from public and in the form of units, but that fund cannot do anything. That mutual fund will be managed by an AMC, an asset management company. Now, similarly, the Investor Education Protection Fund is managed by the authority. Are you able to understand this? So that authority will have a board, and that board or whatever will have chairman, who will be a secretary of the Ministry of Corporate Affairs, ex officio. Whoever is the secretary, Ministry of Corporate Affairs, automatically chairman of IEPF authority. Secretary is the highest position, yeah. He will report to the minister. Big shot, biggest shot in the MCA on the administrative side. Minister, secretary, then president. So that gentleman or lady will become the ex officio chairman. Minimum 6 to maximum 7 members. Chief executive officer who shall be convener. Okay. So they will be provided with salary, etc., which will be given by the central government and IEPF authority to work in consultation with the control and audit general. And the IEPF authority will be competent to spend money for the objects. So again, the fund is managed by the authority. The accounts will be audited by the Controller and Auditor General of India, and the audited accounts together with the audit reports will be forwarded annually to the authority by the authority to the Senate. Okay. So annual report also will be prepared. See, similar provision you will see when we come to NFRA. Or maybe somebody will teach you NFRA. At that time, you will learn. NFRA is also an authority, National Financial Reporting Authority, NFRA. That's also an authority, like this authority. That authority, similar, you'll find. They will be audited by the CAG, and the annual report along with the CAG audit report will be sent to the central, will be forwarded to the central government and the Ministry of Corporate Affairs, obviously. And then that will be placed before both the houses of Parliament. So the central government will place it before both the houses of Parliament. So why both the houses of Parliament? Because once this is presented before Parliament, even if the ministers who are sitting there are not aware of what it is, like that they do, no problem. The minute it gets presented to Parliament, it becomes a public document. It becomes a... See, the Sarkaria Commission report was presented before both the houses of Parliament. Thereafter, it disappeared. Nobody knows where it went. No copies available. Nowhere, except one in the President's office. President's PMO, President's office, one was there. That copy has been republished. In my library, in my office, I have about a whole block of books, about 25,000 books I have. One of that is the Sarkaria Commission report, which I'm keeping. I told my son, it's there. Anytime somebody wants Sarkaria Commission report, again, nobody is able to locate it. Our library has one, give it to them. Okay. So it's so easy to forget history. And it's so easy to rewrite history. Because the evidence is so weak, people can read. So we have to have documentary support for all our things. See, in Tamil Nadu, history of Tamil Nadu till the Chola period, till the Pallava period is not documented. It's all only literary sources, no stone edicts and all. Whereas almost around the time of Ashoka only, stone edicts start, even in Tamil Nadu. So most of the Tamil history that we know about Tamil Nadu begins only with Pallava. Whereas there was a huge Tamil history before that, which was not recorded. There is a problem with India. No records, nothing. Literary sources are there, but literary sources are not reliable. For information, because post about say 55, my practice is doing well. I've earned well. I got a lot of time. Only 40% of my time I spent to run a 600 file practice with about 35 people. Rest of the time I'm free. Okay, so I study literature, history, which is what I wanted to do when I was 15. But then I became a chartered accountant, and no problem. 55, I'm free now. Another 15, 20 years, I will study literature, history. That is why you earn money now. Why do you think you earn money? So that you can have leisure and do what you really want to do. Think about this. All of you are young. Think about it. Money is not an end in itself. Money can do nothing unless you do something with it. If it cannot give you leisure, if it cannot give you free time, what is the use of all that money in the bank? Only our children will inherit it. Okay. So when dividend has been declared or rights or bonus has been announced, a record date will be announced for listed companies. Only those shareholders whose name appears in the register on the record date are entitled to dividend rights or bonus shares. Okay. Got it? So record date becomes very important. In those days, there was no single record date. We used to have a book closure. In those days, physical shares, where the volume will be so high now, so they will say, beyond this date, if you send any share for transfer, you will not get dividend. Your transfer will be recorded, but during the closure period, no transfers will be recorded. Because from that date, now they got 10 days or 15 days to, prepare the list of eligible shareholders. Now, all that is not needed. It is all electronic. Press of a button. See, if I've declared as to the record date, 28th of May, then no problem. 27th midnight, I will know how many shareholders are there. 28th, whosoever name is there will get it. Okay. Now, 126 contemplates a situation where the company receives instrument of transfer of shares forwarded by the transferee after announcement of the above benefits. See, this whole concept is relevant only if there is a book closure. See, what has happened is the book closure has been announced in that, maybe for 10 days. During that time, the members' register is closed. No transfer can be registered. Now the transferee, the guy who bought the share, is sending the shares for registration after announcement of the record date or the book closure date. Now, what does 126 say? In case any shares, transfer of shares has been delivered by a shareholder and the transfer has not been registered by the company. Okay. Now, transfer the dividend in relation to such transfer shares to the unpaid dividend account. I'm looking at this is, friends, for a listed company, I cannot contemplate 126 because all transactions are going to happen online. Even if there is an offline transaction, he has to give an offline DP advice. And that DP will give it to me. No way the transfer cannot be registered. You understand? For listed company. Maybe for unlisted companies, yes. Where a shareholder is giving for registration. But that is doing it only after the benefit has been announced. No. So I cannot pay him the dividend now. So I transfer it to the unpaid dividend account. Okay. But in case the transferor sends a mandate. Suppose I am the transferor. You have already announced bonus. Now, when I purchased, when I sold the share, I sold it to him, X bonus. So bonus, come bonus. So I told him, boss, bonus share is there on this. You take that also, give me my proportionate share. So I took it from him. Now, if he doesn't get the bonus share, it is out. So what I will do is I'll write a letter or a mandate saying, I have sold this share on such and such a date. In the meantime, record date was announced. Instead of giving that share to me, you can give it to him. So the transferor also gives the benefit to the other person. This is called mandate. Okay. In case the transferor or transferee are fighting with each other, in the meantime, transferee sends it. There is some dispute. Then company can keep the dividend or bonus, etc. in abeyance. Abeyance means keep it pending. In case you don't like the word abeyance, no problem. Keep it pending. Keep the bonus rights or dividend pending. Don't give it. Till such time this dispute is resolved. Okay. In my humble view, 126 is a section that's surviving into this new law. In the current technological situation, rarely you will find 126 thing. Long ago in 1996, I remember that I got a mandate from the transferor and I gave it to Chemplast. When I got the share, luckily the company secretary was known to me, a great man called Dr. B. Ravi. So I went to, he said, Srikanth, you get a mandate, I'll take care. So I went to the transferor, I got a mandate, I came back. So the dividend was given to me, bonus was given to me. So long ago, and that was when book closure. So he said, book closure started now. How can I register now? You tell me, like that he said. If you can get a mandate, I'll do it. So I went and got a mandate and we finished. Luckily, the transferor was also in the same city where I live, called Chennai, small city in the south part of India. Maybe you may not know it. It's called Chennai, where I live. Okay. So the other transferor also was from Chennai. Now, punishment for failure to distribute dividend. Very powerful. Failure to pay dividend or post-dividend warrant within 30 days of declaration. Company and every director, company, simple interest at 18% for the period of default. Director, every director, not those who did it knowingly. Every director, except independent directors. That you won't understand now. Later on, when you come to final syllabus, you will know why independent directors alone have immunity. They are given immunity by the law. Because they are poor fellows. They came in thinking that they might even have warned these fellows, but still, in spite of Vibhishan's warning, Raman does what he does. What can we do? So they have to be protected. The rest of them, the bandicoots, will be sent to prison up to 2 years if knowingly a party to default. Okay. See, knowingly a party, brother, you are on the board. How do you know? So whose duty to prove knowingly? Only the person who claims that he was not aware, knowingly. Okay. See, the auditor of Satyam says that he was not aware of the fraud. Now, he's a senior auditor says, I'm not aware of a collusive fraud. So the basic care also he has not taken. That is one way to look at it. But if he says I'm aware, then he becomes a fraud. So if he says I'm not aware, then he's a fool. So either one only we have to go. Okay, basic, even any small auditor will do such verifications. They're not done that. So every director who is knowingly a party, and that and is very, very important. Imprisonment and fine. So which means later on you'll study in final composition. So if you are a director and you don't want to go to jail, you don't want to be prosecuted, you can go for something called compounding. You can go to the regional director or to the tribunal, depending on the amount, and you can make an application and say, I am guilty. I have made good the thing. I have paid the dividend now. But of course, I didn't pay it within 30 days. Please don't prosecute me. Don't imprison me, or don't ask me to pay the fine, so that my name will not come as convicted. If you want to get that benefit, then the section which penalizes now, it should not have imprisonment and fine. Imprisonment, fine or imprisonment, okay. Fine or imprisonment, okay. Only fine, okay. But fine and imprisonment, or imprisonment and fine, not possible to compound. The prosecution has to happen. Director will be convicted. If they are convicted, what will happen? They cannot get many benefits under the Companies Act. Other acts also. Now, let me see if you have any questions before I proceed. Okay, nothing great. See, regarding the institute material, no, that cannot be done. You keep the material with you. I can't do that. I have got one format of conducting the class. This is my format. This I have been using since 2020 when I started the uh, live virtual course. So, you refer to it. My suggestion, no, don't keep the institute material open when the class is going on. Keep your mind open. Listen to me. Already you are having problem in understanding in the English. So you listen to me and you try to understand what I am saying. Take notes also. Then later on, Bad, you go and you refer to the module or whatever you call it and compare. Okay? Believe me, everything which is there is here. Whatever is relevant is here. Okay? So 100% we have covered. Don't worry. Don't have an iota of doubt that I have left out anything which is there I have not covered here. Okay. So, but don't expect me to do that. For that, then no need for this PowerPoint that I have carefully prepared. I can as well throw it, keep the institute material itself on screen and read it. Are you able to understand? That is not the purpose. Our goal is to give you easily digestible content. The PowerPoint is meant to make it easy for you to understand. Okay, so kindly understand what is happening here. I understand I can understand the need that everything should be related to something like syllabus or whatever. Don't worry. Whatever is covered is, yeah, even I need a small break. As rightly suggested with Dhanuchi, let's have a 5 minute or maybe 10 minutes break. Can go have a cup of chai. There's hardly another half an hour. And to my knowledge, topic is also over. I really don't see uh, any more thing. Let us see. So maybe another 5 to 10 minutes ka break. Time now is around 7:55. Maybe up to 8:05. Break up to 8:05. Okay. Sir, break, sir. How to make you host? One second, sir. Sir, can you tell me how to make you host? Sir, yeah, I have made you host, sir. Okay. Okay, chal, we will have a break and we will do it. Anish, okay.
Tani.
Thank you. So, welcome back from your well-deserved break. I have a question from Ms. P. Let's see. In computing profits, any amount representing unrealized gain or shipment of the asset are given in TB. Can you? This line is given in TB. What is TB? Textbook. I already mentioned it. No? It was there. It is even in our slide. It is there. I'll explain. It is there in the slide. You can go through it. Last class, when we were seeing this calculation, see here, it is here. See, for calculating profits, simple logic must be, it's like this. On what I should pay dividend? Only on the real profits of the company for the current year. Am I correct? Now, that current year profit should be arrived at after any previous year losses which is not adjusted. My dear madam, in case some loss of an earlier year, see, for example, in any year, something is happening because of its loss, unclaimed, not, or depreciation not provided in previous year. Suppose in an earlier previous year, you have not provided depreciation. Then if you want to declare a dividend, that also has to be provided now. Similarly, unrealized gain. Madam, there is under the Ind AS, you are marking to market. You are booking the gain which is not realized. But because the accounting standard says do it, you're doing it. But that, and you are obviously you have to credit P&L account. Though you have credited P&L account, it is included in the profits of current year. The gain has not been realized. Therefore, such unrealized gains, if they are there, have to be removed. Similarly, notional gains. When you are showing some assets at fair market value, sometimes you might have to increase also, in which case there will be a notional gain and you're doing it only because of the compliance with the accounting standards. You're not doing it. It's not a real gain. Notional means only in the mind. For accountants, the logic. So really, where is the money? It's not there. So notional gains. Similarly, gain from revaluation of assets. See, I don't know which, I'm sorry to use this word, which account, no chartered accountant will take revaluation reserved to P&L. Yeah. So if some donkey has done it and it has gone to the P&L, I'm sorry to use the word donkey because no member of my institute will do it. No sane chartered accountant or no sane accountant will do it because revaluation of assets is a capital item. Straight away, it has to go to my balance sheet, liability side, reserves and surplus. No way it can come to P&L. But if some donkey has done it, sorry, for purpose of dividend, you cannot use it. In fact, there was once upon a time, even one of my clients wanted to do this. And they were arguing. They were saying, Shrikant, according to the company secretary, dividend can be declared out of revaluation reserve. I said, no way, impossible. And I said, don't do it. Then it became a real mess to convince them not to do it. Okay. And so if at all it is there in the P&L account, capital profit we already discussed. And I made a strong distinction between a pure capital profit and a profit which is on account of sale of fixed assets, realized in cash, money. So on that you can declare a dividend. That can be used for declaring it. So this is what it has been covered. Even see in the textbook, it may be given in one way. This unfortunate idiot has presented it in this way. Okay, but otherwise it is covered. As I told you now, whatever is there in your so-called textbook is there. But can I make a humble suggestion to all of you? That is a UG PG mindset. Let go of that textbook mindset. Because CA, in those days and all, our institute material was not so beautifully prepared the way the Board of Studies is doing now. The BOS faculty and the BOS is working like mad to give you beautiful content. Nevertheless, don't become so, like this is it. No, because the institute examination can come with application of principles. So merely mugging up the textbook will not help you. My suggestion, listen to me and understand the principles involved. That's the way it's done. This is not +2 or UG or PG where There was a syllabus, you muck up everything, chances are you get centum and all. Here, you have to really understand and read and appreciate and write. Especially if you are writing the examination in English, then your ability to read and write in English, it will be good if you are able to improve it. If you think you can do it, it will be great. Your ability to read and write English, but if you're writing it in Hindi, no problem. Then you need not know English. You can write it. Even the principles and concepts you try to appreciate it. Okay. So now we come to the fag end of our session, which is fag end of this slide, which is punishment for failure to distribute dividend. We already saw the penalty. Now they are giving exemption. Penalty is there, but they are saying, hey, in some cases, even if you've not paid or even if you could not pay, it's okay. Exemption. So these are situations where even if the dividend is not paid within 30 days, it is okay. Directors are not liable. Company is not liable. Okay. So when dividend could not be paid by reason of operation of any law, I'll give a clear example. In the current context, you will easily understand it. Already, see, you know very well what is the current situation. Of course, on the one hand, Corona is increasing, coronavirus is increasing. On the other hand, we just now came out of an almost all-out war with another neighboring country. Are you able to understand? Now, in that situation, it's quite possible for the government of India to say, since we have no diplomatic relationship with certain countries, X, Y, Z, neighboring countries which are having land border with us, in case they are holding shares in any Indian company, dividend cannot be paid or removed from India. Sorry. So in those cases, they have to comply with the law. So if a Chinese company or a Chinese individual or a Pakistani is holding shares in my company, I cannot pay. Though I have declared dividend, I cannot pay. I will keep it pending. Okay. So cannot pay it because I've been told not to pay. Also, the shareholder gave directions regarding payment of dividend, and those directions cannot be complied with. And the same has been communicated to him. Please note it, Your Honors. Very, very important. The same has been communicated to him. Unless it is communicated to him, see, he wanted it in some manner. Okay, we are not able to do it because of his location. See, he wanted it to be sent by courier only through professional courier. He also paid the courier charges, but professional courier does not go to his area. He wants it in Delhi Jerry. Delhi Jerry professional courier doesn't want to go, cannot go. Something normally it goes. I'm just giving an example. Don't. If anybody here is from Kerala, Delhi Jerry, they say, no, sir. Professional courier is there, sir. Then what can I do? The idea is he gave one suggestion way of communicating, paying that cannot be complied with. So we sent a mail to him immediately saying, brother, we tried, it's not possible. Give us an alternate. He doesn't reply. No problem. Even if you have not paid it, it's okay. But if you don't communicate, no. Dispute regarding right to receive dividend. Two people, we already remember, you read this in context of 126. In case there is a dispute between transferor and transferee, transferor has said, no, I have not, there's a fraud or something, then you have to keep the whole thing in abeyance. So when you're complying with 126, no problem, you can do it. This dispute. Dividend has been lawfully adjusted against any sum due from the shareholder to the company. So where there is some lawfully due and you adjusted it based on his own instruction, he said, you can take it and no problem. In those cases, you need not pay. Okay. For any other reason, the failure to pay or post dividend warrant within the prescribed time was not due to any default on the part of the company. So today we have classic in the current Amrit Kal, we have classic examples, okay, of these types. Corona, war. Welcome to Amrit Kal. See, for any other reason, the failure to pay. So suddenly Corona announced, lockdown announced. So what can I do? Yeah, beyond my control. Okay, only after the lockdown is lifted, I can even go out of the house. Okay, I can't do anything, boss. Okay, everybody is sitting quiet, closing everything and waiting. So we can't do anything. It's beyond my gut. In fact, during Corona, so much time was given for doing so many things. So much so that our finance minister became so used to giving extension that anytime she will give extension. Further extension. Okay. Anyway, so where for any other reason, the failure to pay post dividend warrant was not due to any default on the part of the company, right? So these are the 7. But one thing you will not find our institute asking, one method of asking, pure theory, no. That is, what are the situations when even a company is exempted from punishment under section 127 for failure to distribute dividends? No. Rather, they will take one of these situations like this and then ask you a practical question. So be prepared for problem-oriented questions. Rarely you will find a pure theory. In those days, pure theory questions were asked. In 1987, when I wrote. So a guy like me who could mug up and vomit, bonanza. Guy like me who's got memory, bonanza. Chuck. But no, the trend for the last 15, 16 years, more than that, has been only problem-oriented. For example, see this question. PQ Limited declared and paid 10% dividend to all its shareholders, except Mr. Kumar, holding 500 shares, who instructed the company to deposit the dividend amount directly in his account. The company accordingly remitted the dividend, but the bank returned the payment on the ground that the account number given doesn't tally with the records of the bank. The company, however, did not inform Mr. Kumar about his discrepancy. Comment on this issue. 2 marks. Don't see, it is Q question 1B2. Means this question could have 3 parts. 1, 2, B, 1B2, 1B1, 1B2, 1B3. Then together 2, 3, 5. Totally 10 marks. Maybe. In which case, this 2 marks is very vital for you. You have to get it. So for that, how many lines you have to write? 5 lines. First, what you should write? Fact. Mr. Kumar, the company PQ Limited could not pay dividend to Mr. Kumar due to the bank account details given by Kumar being not tallying with the bank. Got it? Okay. The company has not informed Mr. Kumar about this discrepancy. Under section 120, now come to the law, write the law. According to section 127, where the shareholder has given directions regarding payment of dividend and those directions cannot be complied with, there is an exemption from punishment. Nevertheless, this fact has to be communicated to the shareholder. Now apply. In the instant case, the company not having communicated the discrepancy to the Mr. Kumar, they are not eligible for claiming the exemption. Therefore, the company shall be punished under section 127. What is the question? What is the reference to the provisions? What is the consequence? Comment. So don't have to write the entire penalty and all. The company shall be punishable under section 127, or if you don't know the section number, no problem. The company shall be punishable for failure, punishable under the Companies Act 2013 for failure to distribute dividend. For that last, under the Companies Act, they may take half mark, which means you'll get 1.5 marks for 2. Okay. See, whenever I read this type now, I will be giving you how to get marks. From now on, when you go through the guideline answers or whatever you're using, think like that. Every line that you write as an answer is a brick. Add a brick, raise the wall. Don't give unnecessary bricks there. Don't put even one brick. Don't put even one layer of cement, which is not needed. Don't gas. Instead, you won't get 1 mark for gas. The man reading it is a seasoned professional. He is not going to give you, unlike a professor in a college correction professor who will give you marks for gas. You won't get any marks for gas. If you write gas, they will put 0 and go. But if you write line by line connected with the answer, chuck, 2 marks. Okay, chalo, take 2, go. If your handwriting is neat, English is good, take it. Or your Hindi is extremely good. Munshi Premchand level, your Hindi. You are right. Munshi Premchand is taking coaching class from you. Such Hindi you are able to write. Beautiful, yeah. Galip is taking coaching class from you. Wow. Such Hindi you are able to write. Logical. Amir Khusro is coming and learning from you. Such Hindi, such Urdu. Okay, if you are able to, fantastic. So, name, see, be seriously, I'm telling you, whichever language, logical and correct writing of the language is done by practice. It is never by fluke. Even if it's a mother tongue, there are people who can confuse in it. So when you write, you have to write clearly, whichever language, Hindi, Tamil, Malayalam, whatever, it should be logical so that the other person understands what you're telling and what you're writing. Hmm? See, think about Galibo, just 2 lines. Man communicates the whole essence of life in it. Huh? What a great guy. Huh? In case the dividend payable to member is 100 rupees, see, the case of Nidhis alone, somebody was asking, no, what is Nidhi? What is Nidhi? Nidhis are having many exemptions, mainly because they are localized. So where the dividend is less than 100 rupees, and the dividend declaration is made in local language in local newspaper, then, and the announcement of the said declaration is also displayed on the notice board, then there is no need for you to comply with 127. You just credit into the account, provided the dividend payable to the member is 100 rupees or less. Are you able to understand? Very small amount. Then no, you don't have to do all this stuff. You can just announce that in the, you don't have to send everything. They'll be having an SB account now. In that you credit. That's it. Fantastic. So we have another 10 whole minutes to work. Let's see if I have any queries. And now notional gains kya hota? I explain now. You are having, see, if you read India's, you will understand. There are many situations under the accounting standards where they will ask you to credit a profit which is not real, or they may ask you to take credit for something that is notional. Notional means in the mind. It depends on situations. If you're once you come to India's and all, in final you will understand. Okay. So illustration 6 explain. You mean institute material ka illustration 6? Let us see. Let us see if I can open it. Is it in the institute material, the so-called textbook that you're referring to? Is it there? Can you clarify it for me? Illustration 6 kaha, Nidhi ji? I mean, little bit Hindi I'm using. Don't think I know Hindi. Kaha means where, na, in Hindi? Kaha is illustration 6? Textbook mein? You want me to? I have to open it and then only know. Good. I will see. I will open it. Let us see if I can explain, I will. It's a good point you're making. I will open the institute material. I think this is it. No, not this. One sec. So 8.27, huh? 8.27. 27. Okay, 8.8. 8 you wanted which one? Illustration, huh? Illustration question 8.27. Question 4. Question 8. Is this the one you're talking about? Can you confirm? It's on screen. Can you confirm it is this one? Oh my God. Because I have one version of the material. Can you tell me the name of the company so that I can refer it here? Maybe I have an older edition. Mr. Alok. Okay. 8.25 in mine. Huh? Okay. Let us see. 8 point. Mr. Alok. Let me search for Alok. Okay, got it. Is this the one? Mr. Alok, holding shares. No, one more is there. Same. Holding shares of face value 10 lakhs has not paid 80,000 call money due on shares. Can the dividend amount be adjusted against such dues? Yeah, we already saw, na? It can be adjusted. It's clear. What is the doubt there? He has to pay call money on the shares. We have to pay dividend to him on the partly paid portion. Na? To that extent, we can adjust the dividend. Where the dividend is declared and there remains calls in arrears, any other sum lawfully due, dividend can be lawfully adjusted. And thus the action of the company in adjusting towards call money, I think. So this is part of this only. I don't know if your doubt is cleared. Otherwise, I can. Okay. So this is nothing but a straight application of the exemption. This is Alok is an example of a straight application of exemption. Yeah. Security premium we cannot consider in calculation. Yes. If you're making a point, I totally agree with you. If you're making a point, I totally agree with you. Sunil Kumarji, security premium cannot be considered in the calculation of free reserve. Why? Why, Ji? Because under the Companies Act, security premium can be used only for 5 purposes. Dividend is not one of the purposes. Dividend is not one of the purpose for which security premium can be used. What is a free reserve? Any reserve which is available for declaration of dividend is a free reserve. Security premium cannot be used for declaring dividend. Therefore, it is not a free reserve. Got my logic? That is why it's not a free reserve. Capital redemption reserve is not a free reserve because it cannot be used for paying dividend. These two, security premium, only 5 matters, including buyback, issue of bonus shares, blah, blah, blah. Five items are there. CRR can be used only for issuing fully paid up bonus shares. It cannot be used for declaring dividend. So it is not a free reserve. So free reserve is any reserve that is available for declaring dividend. Okay. Okay, fantastic. I don't know if I've done justice to the topic. Of course, I enjoyed this session interacting with all of you. So looking forward to maybe meeting you on some other occasion in some other forum, in some other class when I will do it. Requesting Nidhi ji to word her questions in English going forward. Can you try, Nidhi? If you don't mind. For the sake of this old man, try to write in English so that this old man never studied Hindi because he stayed in a state called Tamil Nadu and his entire life he earned crores and crores in Tamil Nadu only. So he never had any need to learn Hindi. So kindly help me. Try to write in English. I'm fluent in English if you want. Punishment. Okay, I'll explain. Yeah, thank you, Ms. P. Okay. Anubhavji, thank you, sir. I'm so happy. Quickly, I will explain 127 as required by my friend. Okay, whatever. Let's not get into the language issue. If you want to speak in Hindi, speak. I will not prevent you. You go ahead. Sorry, let's not go into that language issue at all. Whatever language you want, Bihari also you speak. I cannot understand, that's all. Okay. Even I can understand, but the problem is, suppose it becomes too complicated. No, I am not that much fluent in Hindi. Small words I know, propositions and verbs and all that. I don't know what is the problem here. Specific questions would be very helpful. Instead, you are asking me to explain the whole thing again. So it's not really possible. Time is not there. Any specific doubt here? You can ask. Each one of these is an exemption. There is a punishment. Company has to pay simple interest at 18%. Director who's knowingly a party, he will be imprisoned for 2 years and a penalty for 1,000 for every day of default. In addition, in case there is a default, if these situations are there, there is no punishment. When because of some law being passed, cannot be paid. Example of alien enemy. So that we have declared war with that country. So the citizen of that country, we cannot pay dividend. So I can't pay. Even though I've declared to all the shareholders, I can't pay to Singaporean or I can't pay to Chinese because we are at war. Something like that. Shareholder gave directions. We saw that now. Some direction he gave was maybe send it by professional courier or send it by registered post, etc., etc. I'm unable to comply with it. And I have to inform him that I'm not able to do it. There's a dispute regarding the right to receive dividend. Transferor and transferee dispute have. So in that situation, I cannot take a stand and pay to transferee or transferor. So I will plead 126, section 126. I will say I'm keeping it in abeyance. You fight your matter, come to me. Yes. Calls. Whereas we have to pay dividend. So whatever is him, we fully adjust it and pay the balance amount, or if there's that's all. Or something happens beyond my control, act of Mr. Modi, whatever happens, I'm unable to comply with the requirement. Then, for any other reason, it is beyond my control, beyond the control of the company. There is no, for example, flood, cyclone, whatever, earthquake. Welcome to Amrit Kal, Corona, okay, whatever. So we are unable to comply in those cases. So this is the can give. Oh, thank you, madam. Thank you. Now, see now how this old man is able to appreciate your point. Now, thank you very much. You can solve all. Okay, there will be no doubt. In fact, in the 7th chapter of the Bhagavad Gita, beginning itself, Bhagavan tells Arjuna, Idam Vakshyami Aseshatah. Idam Vakshyami Aseshatah. He promises, I will teach you everything, asesham, without anything left over, I will teach you. So, in that spirit, idam vakshyam asesham. Everything is taught. Only you have to go and write the exam and clear. Okay? Good. Tasmad yudhyasva bharata. Bye. On that note, I say goodbye to all of you and wish each and every one of you all the best. See you in a future class. Bye. Sir, class over, sir.